It's been another bad week for SoFi stock with the share price down another 6%. But is SoFi Technologies a millionaire maker stock? Once again, we've had a mix of good news and yet more insider selling. So what the hell is going on at SoFi and should we be worried? In this video, I will explore this and why I think that SoFi stock is now a golden opportunity. Now we have a lot to get through in this video, so I will keep this intro short, but if you find any value in this, can I ask you to smash the like button? It literally costs you nothing, but it helps me out so much. I'm aiming to get 500 likes on this video. Help me achieve this goal. Subscribe to the channel if you're new and hit the bell notification so you don't miss out on any new content like this. I want to point out that I'm not a financial advisor. This is not financial advice, so always do your own due diligence. And try to answer the question later in this video, but for now, let's get straight into it. On Friday, we had a case of more insiders selling SoFi stock, but first I want to look at an article about SoFi that I found very interesting. Is SoFi Technologies a millionaire maker stock? First of all, SoFi is rapidly expanding as it captures market share and increases revenue. It's posting profits, and yet the stock is trading now at a bargain price. So let's take a look at this article and see why SoFi is considered an absolute bargain at this price, and how adding it now could help investors build a millionaire maker portfolio. Is SoFi the bank of the future? SoFi has its focus on students and young professionals. It designs its products to be appealing to customers in those demographics, with clear graphics and explanations for people to manage their own finances. Attracting customers with low interest rates and easy-to-use interface helps build trust and scale up and increase its profits. As we can see here on this graph, SoFi stock has plummeted over the past 6 months, but the performance numbers tell a different story. SoFi's net revenue has increased 37% year over year in the first quarter to $645 million. It added more than 600,000 new members, which is 44% more than it added in the prior year period, to bring its total to more than 8 million. And the total number of products being used by those customers has increased 38% to nearly 12 million. SoFi posted GAAP net income of $88 million, making Q1 its second straight quarter in the black, with management projecting full-year income of $170 million, which would make 2024 the first time it was profitable on a full-year basis since it went public. Now, if we look back at the historical price-to-sales ratio, we can see that since going public, SoFi has been very up and down, reaching a crazy high back in 2021, before dropping very low in 2023. Although SoFi's share price has gone up since the lows of 2023, it has been dropping again in 2024. But although the share price has been dropping, revenue has been increasing every single quarter, which presents an opportunity. Which leads us on to one of the most important factors when it comes to any stock, and that is risk versus reward. Now, although SoFi is now profitable and predicting that to continue, its business is shifting, which creates instability. Management is moving again to expand its services that SoFi offers. Changes along these lines were major elements in its growth strategy for many years, preceding the onset of rising inflation in 21 and 22. And that more diversified operation has been a boon for the company. Were it still entirely a lender, its business would have been crushed when the Fed raised interest rates to combat high inflation. The business diversification has led to higher revenue, but the flip side of high interest rates on loans is that it now pays high interest rates on deposits, which attracts new customers and puts dollars into SoFi's coffers. Management is projecting that the lending business will come in at 92 to 95% of 2023 levels this year. This contraction will be countered by the growth in two other segments, technology and financial services. They are on track to increase about 50% of total net revenue. The technology platform segment is forecast to grow by about 20% in 2024, while the financial services business is expected to grow by about 75%. But a couple of things have been holding SoFi back and helping drive the share price down. One of these is the sales from insiders, which I'll talk about in a moment, but SoFi also recently announced a new equity offering. Now, the market does not look too kindly upon shareholder dilution, and while the stock sale might not be a huge deal on its own, in the context of the other areas of concern, it bolsters the arguments for pessimism around the stock price. But a few things should not be ignored. When you factor in SoFi's low valuation, this looks like a bargain not to be missed. The stock trades at a price to sales multiple of 2.8 and a forward 1-year price to earnings ratio of 30. Considering SoFi's high sales growth and its transition to sustained profitability, it looks dirt cheap. Investors should consider adding SoFi stock to their portfolio for years of gains. It could deliver millionaire maker returns as part of a growth-focused portfolio. Now, in my opinion, there is two very short-term opportunities here. First of all, on Friday, SoFi stock dropped to a new 52-week low. The last time we were here was back in November 2023, where SoFi went on a huge rally from 640 up to 1170. Now, I'm not saying that's going to happen again, but I do see a nice little reversal coming in the next couple of weeks. Now, I've said it before and I'll say it again. I really don't expect the stock to stay below $7 for long. There is a huge long-term descending wedge forming and the RSI is now at rock bottom. I feel that everything is pointing towards a nice reversal and I do expect this very soon. At any point over the past year where the stock has dropped as rapidly as it did this week, there is usually a very quick reversal. But these are short-term and I believe that anyone invested in SoFi is looking more long-term. So this begs the question, is SoFi a buy or a sell at this price? Drop a comment below, I want to know what you think. Now, I know a lot of you have been holding SoFi stocks since 2021 and have average costs of maybe up near $20 and have long since given up on averaging down. But if you were new to SoFi stock today, with money in hand, would you buy SoFi at these prices? Leave a comment below and let me know what you think. The stock has dropped to a market cap of only $6.8 billion. This is a company that has total assets of over $31 billion, now trading at $6.8 billion. This is a company with total stockholder equity of $5.8 billion, currently trading at $6.8 billion. These are the kind of numbers that we see from companies that are making losses, huge losses even. It is extremely rare to see a profitable company trading anywhere near its net asset value. And when we look at the first 3 months of this year when compared with the first 3 months of last year, we're looking at a company that is turning losses of about $32 million per quarter into profits of close to $90 million in a single quarter. And this is only going to get better. We've already seen the data. We already see the trend in the company performance and it's only going one way. So from one perspective, this is an opportunity right now to buy a stock that's at its 52-week low. This is also an opportunity to buy a profitable growth company that is trading near its NAV. What is unclear though is why exactly the Qataris have decided to sell out now. Maybe they're putting their money into other investments, maybe they've just decided to cut their losses. On Friday, SoFi Chief Financial Officer Jeremy Rochelle sold 56,273 shares. Now, obviously, Jeremy Rochelle's sale of 56,000 shares is in absolutely no way compares to 19 million shares sold by Qatar, but it does follow this trend of SoFi insiders selling stock. Over the past year, Jeremy Rochelle has sold a total of 222,000 shares and has not made any purchases of the company's stock. Shares of SoFi Technologies were priced at $6.41 on the day of the transaction, giving the company a market cap of approximately $6.8 billion. The intrinsic value of the stock is estimated at $8.10, suggesting that the stock is modestly undervalued. And this is according to Guru Focus Research. But on the flip side of this, while these insiders have been selling, CEO Anthony Noto has been buying shares like clockwork. Last week, the CEO bought another 30,000 shares of SoFi stock, meaning that over the past few months, Anthony Noto has increased his holding by 183,000 shares, with no recorded sales of the company's stock. And another one who has bought massive amounts of SoFi stock since the beginning of the year is Cathie Wood's ARK Invest. Qatar might have recently sold 19 million shares, but ARK Invest have bought more than 10 million shares since February 2024. So what do you think of this? A lot of investors now like to avoid what Cathie Wood is doing, just like how people will do the opposite of something that Jim Cramer says to do. But there is a lot of talk on social media right now about SoFi, so always do your own due diligence. Remember that I'm not a financial advisor and this is not financial advice. But if you enjoyed this analysis, then please like and subscribe. I hope you make a load of money on this stock. Follow me on Twitter and I'll catch you in the next video.